Welcome to the Swing Trading with Cycles channel. It is January 24th, 2023. It's a Tuesday. We're going to do an update on natural gas today. And I'd say the headline is we're still declining into a daily cycle low. And that daily cycle low may also be a weekly cycle low, so a potentially longer term low. But it's also possible that we're actually going to get a short-term low and then another short-term rally and then rolling over again. And we'll talk about what may be suggesting that. So let's look at the daily chart first. So this is the chart for natural gas, Henry Hub futures. And if you're new to this channel, definitely take a look for a pinned comment that's going to have the previous natural gas videos for about other asset classes as well as just background information on cycles analysis, and most importantly, price action. What's a swing low? What's a swing high? What does it mean? How to identify them? Super important. A swing low is how an uptrend begins. A swing high is how a downtrend begins. It's how you mitigate risk and maximize return. If you're buying right after a swing low has occurred, like this here was a swing low after a 5-day rally, if you're buying after this, you have to understand you're taking on a huge risk, right? You're literally buying as a downtrend is starting. That's not wise, right? You want to buy after swing lows. Now, even every swing low, not every swing low is going to lead to a really long rally, right? Like this was a decent rally of 15 days, whereas this was a feeble rally of 5 days. And as we record right now, we're starting to roll over. We're about to print a bearish outside daily candle. Super important concept as well. Outside candles. It's when a candle makes a higher high and a higher low, a higher high and a lower low. So this candle has already made a higher high, and then it went red. So now it's most likely going to make a lower low, and that lower low meaning below this candle here, the previous candle. So that is below 3.243, right? And we're up here at 3.305. Okay, and this line here was the line that we needed to cross above. So as of yesterday, as I tweeted about, and you can see a link to follow me on Twitter if you're not already. I tweeted last night we closed as an inside day, as a swing low. But because of the doji candle, we were going to open as an inside day, which we did, right? We opened here, but what did we do? As I just said, we made a higher high. Again, that's important to note. This candle was green at one point. That's always the case. Whenever you see a candle with an upper wick that's red, always, just by way of math, it means the candle was green at one point. So you just had a vicious reversal. At one point it looked like, oh, okay, maybe this is the rally that we've been looking for. And then no. So we are also going to look at Boyle and we're going to look at UNG to see what those exact levels are. But we'll look at natural gas first, the source, if you will. So the swing low that is about to fail right now would be from day 30, so that's Friday. And so if and when this fails, and most likely it will, that would make this day 32. So again, we're getting long, the daily cycle is getting long. You can see the previous one was 30 days, the one before that was 33. You had these shorter ones. You had this one at 37 days, this one at 39. So it looks like we're probably going for something like this, like 35 to 40 days, something like that. And there's nothing magical about those numbers. It really is just a concept that every rally has to end at some point and every decline has to end at some point, right? They can't go on forever. There's a finite amount of capital in the markets. And so when you combine a rally, a trend leg, and a retracement, that's gonna be contained within a certain period of time. And we're getting late here. So again, certainly we're probably going to make a lower low here, but at this point, this kind of huge move where we dropped 40% in 10 days, it's probably not going to do something like that again before we get a little bit more of a rally, but we're going to have to see. And we've talked about this, super important, especially now that we're in this pretty massive downtrend. You want to use the 10-day moving average as just almost like a training wheels, like a second set of confirmation. Theoretically, we are going to close above the 10 period moving average at some point, right? On the daily chart. We will. That's a guarantee because that's just the way price works, right? The catch though is if you wait for a moving average crossover, you're always looking at a later signal. And what I mean by that is you can't have a moving average crossover without a higher high. Like I should say, you can't move above a moving average without a higher high. In the same way that you can't move below a moving average without a lower low. Which is to say, like this is the higher high, right? And you can see we did not close this. That's this blue line here. We did not close above the 10-period moving average. We got above it intraday, and then we pulled back, and then we got above it today. And again, this was a green candle. A few hours ago, like we'll look at the innards and see exactly when we started to break down. But it looked like, oh, maybe this is going to be literally our first close above the 10-day moving average since December 16th. So over a month. And then just pull up any price chart, you'll see. And it's not that the 10-period moving average is special, as I've said many times. Change it to the 11-period moving average or the 8-period or 9 or 12. It doesn't matter. Anything close in that ballpark, it's a short-term moving average. And so it is so short-term that at some point, by nature of price making higher highs and by nature of price having to make a series of higher highs and higher lows or lower lows and lower highs, we're gonna at some point retrace above that moving average. So same exact concept for the weekly chart. So you can see the 10-period moving average is way up here. And I doubt, and that's what I was saying, we could see a world where this low that we're about to get on the daily chart may end up being a low on the weekly chart. That doesn't mean this low is going to rally above the 10-week moving average, because that's quite a distance, right? Right now, that's almost at $5. Now, it is going lower, and so that means every successive day, this goes lower and lower, and so it's going to eventually be low, like 4 weeks from now, it's going to be like down here or something, right? It's going to keep dropping. Also note this yellow line to 200-week moving average. So this is getting pretty bearish pretty quickly. And also just note, like past declines spent a lot of time below that, as I mentioned before. And in the context of like the cycle, this would be, 5, 6, 7, 8, 9, 10, 11, 12. So right, this would be either week 13, if this is a new cycle, if we think of this as a new cycle with a top on week 4, or 13 plus 16, it will be week 29. So if this whole thing is a cycle, it's the 29th week of this cycle. Either way you think about it, price is really far extended, and this is super left translated. And if we look at the monthly chart, again, as I keep pointing out, you got this no man's land area where we've already peaked below it. Below 3.178, you essentially end up in a zone that goes all the way down to 2.383, right? So call it $2.40 thereabouts, based on this price action here from, call it late 2020, early 2021, which was very formative. Price, like a lot of decisions were made within this time period. A lot of price aggregated here, so it's going to be interesting to see what happens if price does drop into this zone. And again, long-term cycle, top on month 26. This is currently month 31, and so this could have some legs, right, in terms of continuing to decline for several more months, right? And we've talked about this multiple times. The seasonality chart tells us April is the most bullish month for nat gas, so wouldn't be surprised if maybe we get our low then. And so if you think, like, finally, before we move on to Boyle, and we'll look at some intraday, lower time frame charts as well, you can see it's an inside week so far for nat gas. So even though we're seeing downside right now, we're making new lows. It looks like we're about to break a swing low. It doesn't get really bearish until we go below last week's low, and last week's low is obviously the local low. So far, that's 3.091, and so that's the level that we're going to be watching for. But there is certainly a short-term trade here on like an inverse product like KOLD, so we will look at that as well. And so let's look at what this means for Boyle, for instance, just in the bigger picture, and then we'll look at the higher time frame charts eventually as well. Oh, I'll also just go back and note, we've already rallied about 15%. This thing does that. Like let's zoom in on the daily chart. So all that to say, this is certainly just like another, like all these are just lower highs, right? Like if you look from this bottom to here, this was like a over 15% in terms of the rally. So it kind of matches these previous ones, right? So it makes sense that we're now kind of moving into another lower low. And again, the trend has slowed down. Like we're not like just cascading lower, just like a waterfall. It's become more gentle, but the trend is still down for now, though again, wouldn't be surprised that we get our low pretty soon. So I'd be careful shorting in the hole here. So for Boyle, it's an inside day for Boyle. Important levels to note is the high at 1084 from yesterday and the low at 926. So below 926, this thing could really get going. And we're up here at 982, so there's actually a bit of downside left. Let's look at what the equivalent levels are on KOLD. So KOLD, it should, hopefully this is making sense to you, right? KOLD is also an inside day. It's just the reverse kind of situation where we may get a bullish reversal. Or I should say, we're more likely to break to the highs because we're green, whereas Boyle is more likely to break to the lows, obviously. So KOLD, that high is 45.79. And we talked about for KOLD, if you look at the monthly chart, there's really potential up to like $76, right? And we're here at 42, so that's a nice bit of upside, like well over 60, maybe even 70%. We've already kind of tested these previous highs here, and we're just kind of staying up there a little bit. So this kind of zone, 76 would be, optimistic to be fair, but like anywhere from like the mid 60s, right? So call it 65 to 75, which again is a nice bit of upside, but understand you're doing that after this thing has already declined, right? And I mean, we can use Boyle for that example. Again, it's going to mirror the chart of natural gas that we were just looking at. But I mean, we've already, after this huge decline, again, the trend is slowing down. But we would look for a breakdown below 926 for Boyle is the expectation. And if we look at the weekly chart, so on the weekly chart, that weekly low is at 922. So not far below that 926 level. And again, this thing is making all-time lows, which, is obviously never a great sign. So that's Boyle on the higher time frames. Let's look at UNG. So for UNG, same exact price action, just different levels. So that low for the day is 1021. The high is 1106. So if we saw some kind of bullish reversal, would need to get above 1106. And again, notice this 10-day moving average. We have not closed. Last time we closed above it was December 16th. That's going to happen at one point that we're going to close above it. It'll probably happen within the next few weeks. So that's going to be an opportunity. Again, no way to know how long that rally is going to last, obviously. And we're going to actually look at how you might use these moving averages on lower time frames as well, because I think that's an important concept to understand. And for UNG, the low for the weekly is $10.18. So same kind of idea where the low for the week is not far below the low from yesterday. Well, that's interesting, actually, because yesterday was 1021. Oh, right. Excuse me. That was last week's low. Not right, because yesterday was the first day of this week, obviously. And for UNG, not making all-time lows, but I mean, zoom out on this chart. My God, what a vicious downtrend this thing is, right? And all-time low for this thing is $8.22. Seems very likely that level gets tested in the next month or two, especially if we're thinking about a more protracted decline for natural gas, something where we don't get a bottom until something like April. I mean, let's actually scenario plan that, and then we'll go to the lower time. We'll close things out with the lower time frame charts. And again, as I said, we'll look at the moving, how to use moving averages on lower time frames, which I think is kind of interesting, right? So let's just do a scenario here, right? So let's just say that we get our low on week 40, right? Let's just say it's a really long cycle. So that would be, again, this is not a prediction, it's a scenario, right? This is one of the ways price could develop over the next few weeks, and we can watch if it does look like it's turning out that way, right? And let's say we then get another bearish daily cycle that lasts about 40 days. Well, isn't that interesting, right? Isn't that interesting? That would actually take us to the end of March, which gets you to that April time period. Now, these are all approximations, and again, these are scenarios, not predictions, but you could see a world where we get something like that, right? Where we get a bounce, and if it's not day 40, maybe something somewhere around there, and then we get a little bit of a rally, right? Maybe it lasts a whole week. We do close above the 10-period moving average. That's one kind of that's one sort of benchmark you can kind of think of, pretty concrete in your head, right? But then we roll over, similar to how this rolled over after just 5 days, right? Clearly crossed above the 10-period moving average, and actually consolidated above it for a few days. So this was a real fake out for folks. Like, oh wow, 1, 2, 3, 4, 5 days of closing above the 10-period moving average. That must be really positive. We're about to rocket up, aren't we? Of course, we know we didn't, right? And so we get something like that, and then we roll over into another daily cycle low. Maybe not something quite as dramatic as this, but that gets us into that mid-twos area, that like $2.40 range. And like if we think about, I'll take auto off, like what levels might we get to? You could see a world where, let's say we kind of drift down to like here, and then let's say we rally all the way up to like 430 even, something like that, right? And then we break down to the 240 area, right? Like by, call it early April, late March, something like that, right? So you can kind of think in your mind's eye, something like that, right? And so, of course, there will be money to be made in this trade, but I'd actually be much more interested in this trade, right? Trying to get into KOLD after this swing high is printed and we start this other move lower. So that's what we're going to be watching for here. And so, as I said, let's look at the lower time frame action. We'll actually look at Boyle. And again, I'll talk about, we'll see. So when did the wheels come off? So that happened just in the last couple of hours. It's just about noon now. And so you can see, interestingly though, this actually is still a structure that's intact. That's important to know about, right? Like as long as we stay above the low from this candle, right? Let me mark that here. That's interesting. Price is trying to fight back. If we could stay above that low, this just basically becomes a higher low, and then a move higher. Now, again, this thing has been incredibly weak, so unlikely that we do get that, but that is a scenario that you want to be aware of. So that's a low at $9.74, and we talked about how the low for the day was $9.26, and so that's how you think about your stops. You move to a lower time frame to find a better risk reward. So, and I'm not going to trade this, full transparency, but so you could put a stop right below 974. We're up here at 986. That's actually not bad risk reward, right? But again, seeing the bigger picture, more likely that this thing breaks down. But let's move over to, if we look at the lower time frames, but then we'll actually look at natural gas first. So if I go to the 8 hour, right, and so I'm keeping the 10-period moving average on, and so that's important. That just means that it's the last 10 candles, essentially, right? So in this case, these are 8-hour candles. So it's essentially saying you can think of this as the 80-hour moving average, if that makes sense, right? And so you can see this is that big decline. Back in December, we talked about we couldn't close above December 16th was the day that we kind of fell off a cliff. You can see it hasn't closed many 8-hour candles above that 10-period moving average either, right? This one didn't quite get there. This one we actually had 2 candle closes there, so that wasn't a good fake out. So the point here is that before we close above the 10-day moving average, we're going to have to close above the 10-period moving average on a lower time frame. And this is your 8-hour chart, but you could even zoom down to the 1-hour chart, right? Same kind of idea. You can see we've been above that 10-day, like most of the last day or two, right? We've just broken down below it now. And so this becomes something that you can use as a shorthand. Again, you want to focus on the lower lows and higher and lower highs. Or excuse me, you want to focus on higher highs and lower lows. Like, are we making a higher high or are we making a lower low? But this becomes an additional qualifier, you can think of it as, right? Like, did we make a higher high and we're now above the 10-period moving average the way that we were here? And I would say you want to just be, you want to pick your time frame right? Like in this case, I think the 8 hour is pretty good for natural gas. And so you can see we've actually had 1, 2, 3, 4, 5 8-hour closes above, and now we're about to have an 8-hour close, or we're on pace for an 8-hour close below it. This 8-hour candle closes in 4 hours and 45 minutes, so a lot can change, obviously. But that's going to be an important thing to kind of watch. And so for Boyle, I would look at the 1 hour. I'm looking at the 1 hour chart and using that, and you can see we've oscillated above and below it like quite a bit. Like even through this whole, well, this is actually mostly below it. It's this time period where we've started to oscillate above and below it. And you can see same kind of picture as for natural gas itself. We've just crossed the below it. But again, this structure is bullish right now for now. The other thing I point out here for Boyle on this lower time frame, these two big hourly candles are very promising because they take out all of this downtrend. I mean, look at that. I hope you can you see this whole period of like malaise, right? Like not great price action. All of that is erased by these two candles. So this is just many hours of ugly price action, and you have 2 hours of big up. But now this move is threatening to be reversed. So that's what we want to watch for. Is it going to hold? It's trying to make a low here, right? It's trying to do something like, something like this. That's what we're watching for on the bullish side. Again, there's a lot of downward pressure from higher time frames, so I would not count on it. Just like this thing failed and this thing failed, right? So, but we're watching it. Again, the important thing is to understand what the levels are, so you're not appealing to emotion per se. So we'll leave it at that. I think that's all we wanted to cover. I'll continue to give updates on Twitter in real time as it makes sense. And again, at some point, the trend is going to change on this thing, and you just want to be ready. You want to be in place to profit, but you don't want to be buying on the way down, especially something like Boyle that's making all-time lows. That's just my 2 cents. So we'll leave it at that. Thank you for watching.